If you are new to investing or already on your investing journey, utilizing exchange-traded funds or ETFs is a great way to build stability and diversify your portfolio. In my opinion, one of the first investments one should ever make is in an ETF. If you are unsure what an ETF is, well then you are in the right spot today, because I'm going to be breaking down exactly what these exchange-traded funds are and how they benefit your portfolio. In addition, I'm going to give you 5 of the top ETFs that I invest in personally on a regular basis in my portfolio. If this sounds interesting to you, then let's dive in. Hey everyone, Mark Rusin here, back for another video. If you're new to the channel, hit that subscribe button so you're notified anytime I drop new content. Also, if you could give us a big thumbs up, that would be huge in growing our community here on YouTube. As always, everything shared on this video is for educational and informational purposes only. Please perform your due diligence before investing in any stock or equity. With that being said, let's jump in to exchange-traded funds, or ETFs. An ETF can be thought of as a basket of stocks. The basket could be totally different sizes. They could be a large basket, it could be a small basket, it could be a basket with specific products in it. Okay, maybe we're getting too much into the baskets, but ETFs are a basket of stocks. It can include 50 stocks, 500 stocks, or thousands of stocks. ETFs can be sector specific, or they can just follow basic indexes. They come in all shapes and sizes. And in fact, in 2020, there was over 7,000 ETFs trading globally. As I mentioned, ETFs come in all shapes and sizes. You could have an ETF that focuses just on the S&P 500. You could have ETFs that just focus on technology stocks or consumer discretionary or healthcare stocks. You could have ETFs that focus on the little guys, or ETFs that just focus on the big guys. There are different ways to manage these ETFs as well. There are passively managed ETFs and there are actively managed ETFs. And what comes along with these, if you are an actively managed ETF, what that means is you are constantly trading in and out of different positions on a regular basis. Think of Cathie Wood and the ARK Invest funds. They send out an email each and every day of all the stocks that they bought and sold. That is an actively managed ETF. And with actively managed ETFs come higher expense ratios. And what an expense ratio is, it's the cost that you are charged for investing in this ETF. It covers the cost of the manager to make these trades each and every day and actively manage your ETF position. On the flip side, there's also passively managed ETFs. And this is ETF positions or exchange-traded funds that really set it and forget it. There's very little movement in terms of buying and selling new positions throughout the year. Take, for example, an S&P 500 ETF. The S&P 500 index does not change all that much. In fact, the S&P changes up to 4 times per year with new positions. Any ETF that tracks this index would have to update their positions as well. So these are some common things to look at when investing in an ETF. Are you looking for a specific sector, a specific market cap, or an index? Or there's even total market ETFs, which track, you guessed it, an entire market. So figure out what type of ETF you want, but also be aware of the expense ratios, because some of these actively managed ETFs can see expense ratios above 2%, which can really eat into your performance and your returns over the years if not taken into account. As I mentioned from the start, ETFs are a great way to build stability and diversify your portfolio from the start. That's what makes ETFs a great investment for not only new investors, but regular investors as well, to continue to build strength for their portfolio. It's a very hands-off approach to investing and a great way to build wealth long term. With that being said, let's dive in to 5 of the top ETFs that you can invest in. And as always, I want to be as transparent as possible with you. These 5 ETFs that I'm going to give you today are 5 that I invest in on a regular basis. The first ETF that I'm going to give you today is the Vanguard S&P 500 ETF, stock ticker VOO. As you could probably guess, this ETF tracks the S&P 500. This is one of the ultimate ETF investments that any new or regular investor should have in their portfolio. Now there's numerous different ETFs that track the S&P 500 from different brokerages, and they're all relatively exactly the same, being that they track the S&P 500. Schwab has their own, Fidelity has their own, and this one happens to be Vanguard's. VOO has a stock price of $400.04. Over the past year, the ETF is up 31%. The ETF has a dividend yield of 1.3%, and it's considered a passive ETF and a low-cost fund with an expense ratio near zero at 0.03%. Now, as I mentioned from the start, ETFs are a basket of goods, and they can range from having positions from 40 or 50 stocks to hundreds or thousands of stocks. And when researching ETFs, you can look at any financial website and see what their top 10 positions are. And not only are the top 10 positions important, but you also want to see what percentage of the entire ETF do these top 10 positions make up. Now, if you're looking at an ETF that has hundreds of positions in it and the top 10 only make up, say, 5 or 10%, well, then it doesn't have a huge weighting. You probably want to have a better idea of what else is in that ETF. But on the flip side, if you have an ETF with top 10 positions that make up 25% plus, well, then you want to have a better understanding and probably like those top 10 positions before investing in that ETF. Looking at VOO, the top 10 positions make up 28% of the ETF. The top 10 positions consist of Apple, Microsoft, Amazon, Facebook, both shares of Google, Tesla, Nvidia, Berkshire Hathaway, and JP Morgan Chase. The second ETF that I invest in regularly is the Vanguard High Dividend ETF, stock ticker VYM. This is a great ETF for dividend investors looking for a solid yield but also high quality stocks. VYM currently trades at $102.30. Over the past year, the ETF is up 24%. The dividend yield for VYM is 2.9%. They are also considered a low-cost ETF with an expense ratio of 0.06%. The top 10 positions make up 24% of the entire ETF, and they include JP Morgan, Johnson & Johnson, the Home Depot, Procter & Gamble, Bank of America, Comcast, Pfizer, Cisco Systems, and ExxonMobil. The third ETF that I invest in on a regular basis is the Vanguard Technology Information ETF, stock ticker VGT. As you can imagine, this is an ETF that focuses on the technology sector. So here, like with VYM, they were focused on dividend-paying stocks. With VGT, we are focused on technology stocks and not as focused on the dividend stocks. VGT currently trades at a stock price of $411. Over the past year, this ETF is up 38%. The ETF has a low dividend yield of only 0.6%. The ETF is more actively managed, thus it comes with a higher expense ratio, though in the wide scheme of things, it is still considered a low-cost fund. The expense ratio for the Vanguard Information Technology ETF is 0.1%. The top 10 positions make up 58% of the ETF. So anytime these top 10 positions make big moves, you will see the ETF follow suit. The top 10 positions include Apple, Microsoft, Nvidia, Visa, PayPal, Adobe, MasterCard, Salesforce.com, Cisco Systems, and Intel. The fourth ETF that I invest in on a regular basis is yet another dividend ETF, and it is the Schwab Dividend ETF, stock ticker SCHD. The Schwab Dividend ETF currently trades at $74.23. Over the past year, the ETF is up 32%. Plus, you get a dividend yield of nearly 3%. This is a passive ETF, thus it comes with a low expense ratio of only 0.06%. The top 10 positions make up 42% of the ETF, and they include Pfizer, Cisco Systems, BlackRock, Broadcom, PepsiCo, the Home Depot, Merck & Company, Texas Instruments, Coca-Cola, and Verizon. The fifth and final ETF I will leave you with today is one of my favorites. Now, the past few we have focused on dividend ETFs. We had one technology ETF, but this one is the Invesco Next Generation 100 ETF, stock ticker QQQJ. Many of you may already know the QQQ, one of the most famous and most popular ETFs out there. They handle all of the big technology companies like Apple, Amazon, Facebook, and Google's of the world. But what this one does is they focus on the next generation, the up-and-comers in the technology sector. So these are going to be more mid-cap stocks, and I will get into the top 10 positions where you may know some of the names. One of the most popular names that just graduated from the QQQJ into the QQQ ETF was CrowdStrike, one of my favorite investments currently. Many like to think of QQQJ as the junior varsity to the larger or the varsity team ETF, the QQQ. Taking a look at the ETF, it currently trades at $33.76. This ETF is younger, having only started in October of 2020. Since then, the ETF is up roughly 25%. Being that this ETF has many mid-cap and up-and-coming growth technology companies, not many of them pay dividends right now. Thus, the ETF only has a dividend yield of 0.2%. But that is not the main focus of my investment in QQQJ. Here, I'm looking for high-growth companies for the long term. This ETF is more actively managed, thus a higher expense ratio of 0.15%. The top 10 positions make up 21% of the ETF. Let's take a look at these top 10 positions. Fortinet, Roku, Zscaler, The Trade Desk, Garmin, Old Dominion Freight Line, Datadog, Zebra Technologies, Liberty Broadband, and Etsy. And there you have it. 5 ETFs that I invest in regular, and I believe are 5 of the top ETFs that you can invest in for the long term. You get a mix of broad exposure, you get some ETFs that focus on just technology, and then I have some that are dividend and high growth ETFs. And again, there are thousands to choose from that will fit the bill of exactly what you're looking for. Maybe you're just looking for some healthcare exposure. Or maybe you want to be even more focused and look at cybersecurity ETFs, which just invest in companies that have cybersecurity exposure. But before investing in any ETF, have an understanding of what stocks they're investing in, and also make sure you have a good understanding of what the expense ratio is, so that you know that your investments aren't getting cut into each and every quarter as those expense ratios are taken away from your investment. As always, I hope you enjoyed the video. In the comments section below, tell me some of your top ETFs that you invest in today. And also, if you haven't done so already, please do us a favor and hit that like button, as that'll be huge in growing our community going forward. With that being said, we will see you next Wednesday.